Starbucks's revenue, $9.57 billion, rose 5%. Total operating expenses was $9.3 billion, up 19%. Operating income was down 78%. Starbucks' quick ratio is approximately 0.51, suggesting potential liquidity concerns for meeting short-term obligations. But 0.51 suggests that the company relies on inventory and other current assets to cover its short-term debts. A substantial amount of debt has been a contributing factor. In September 2025, the company's total debt was $14 billion, while its equity was a negative $8.089 billion. Starbucks is paying dividends while reporting lower earnings due to factors like restructuring costs, inflation, and decreased store traffic in North America. While the company is still profitable and its revenue grew in the last quarter, its earnings and operating margins have declined, leading to a payout ratio that is high relative to its free cash flow. A history of paying out dividends that are larger than earnings has also contributed to the negative equity situation. Other issues like challenges with declining sales in its key markets and pressure on profit margins have also contributed to the company's financial difficulties and investor concerns. Its U.S. same-store sales were flat for the quarter but turned positive in September. North America operating income for fiscal 2025 decreased 41% to $3.2 billion. Operating margin contracted 830 basis points to 11.5%. The coffee chain's global same-store sales rose 1%, lifted by international markets. International operating income for fiscal 2025 decreased 9% to $950 million. Operating margin contracted 210 basis points to 12.1%. Channel development operating income for fiscal 2025 decreased 4% to $885 million. Operating margin contracted 500 basis points to 47.3% in China, the company's second largest market. Same-store sales rose 2%, boosted by a 9% climb in traffic. Under pressure in the country from homegrown rivals with cheaper beverages, Starbucks has lowered prices on many of its iced drinks to bring back customers. The company is also exploring selling a stake in its China business after years of sales declines in the competitive market. The company values the China business at more than $10 billion.